And stocks are surging into the final hour of trade. You can see the Dow trading up by 345 points. A better than expected jobs report, although very dismal, coupled with some optimism on trade relations with China, holding up the market after a busy week for earnings as well. Here now are SureVest CEO and Chief Investment Strategist Rob Luna and Kingsview Wealth Management CIO and Fox Business contributor Scott Martin. Rob, let's go ahead and start with you. I see a market like this today. I see an unemployment rate that has skyrocketed to 14.7%, and even if it was expected, it is still terrible. Do you think the market is moving too far too fast?
You know, I don't know, Jackie. I mean, the challenges right now, this market up until this point has really been led by, a few stocks. We know the FANG names. I think what you're starting to see, though, that gives me a little bit of comfort in a day like today. That breadth is starting to broaden out. We're seeing other stocks start to pick that up. Some of the industrial stocks, the financial stocks are even rallying. But one thing we wrote about to our clients today, Jackie, I think that people have to remember, when you look at the MSCI All Cap World Index, the yield on that right now is about 2.65. On the 10-year Treasury, it's about 0.65. That's the widest gap we've ever seen in history. 200 basis points more in income to invest in stocks today. With the amount of monetary policy that we're doing, fiscal stimulus that's been pushed into the market, that's going to continue to keep what we believe a floor into the markets.
Okay. Scott, there's a school of thought out there that we may see another drop before we rebound completely, although there are some saying, no, we hit the bottom and that's it. Your thoughts on that?
I think the bottom is probably in, Jackie, but that doesn't mean that we're not going to see some more down days. And it feels like on days like today, I love how you set it up. I mean, the jobs number was bad, but not as terrible as we thought. I mean, that's just exactly the summation, kind of, as Rob said, with how the breadth is really expanding in the markets. And we're getting a little bit of a FOMO trade, it feels like, guys. It feels like this fear of missing out on the upside, which is a dangerous game because, as we've seen in times past, as you know, Jackie, even on the future side, there's a lot of exposure here that I think folks are adding, say, somewhat irresponsibly, chasing the higher numbers, and that's where you get trapped, and then you see some down days and the selling really starts to pick up.
Okay, well, let's talk about that a little bit in terms of how you're structuring your portfolio right now, Rob. You've got two camps there. Again, the camp that's trying to chase this, regular investors, maybe say with a broader time horizon. Then you've got another group of investors that have been hit pretty hard. They were closer to retirement, and they're a little worried because they haven't necessarily recouped everything. So what sort of strategies would you map out for folks who are at home?
Yeah, I think that's the challenge that everyone's facing today. I think for those income-oriented investors, they're going to have to step into some of these names that maybe haven't quite participated as much, that have decent yields and that those dividends are safe. Maybe looking at companies like Chevron that are yielding about 5%. One that we picked up is a UPS yielding over 4%. And even I think at this point in time, while the dividends are not necessarily safe, something that those investors might want to look at with a little long-term time horizon is some of the banks like a JP Morgan. Because if we do see the economy open back up and we do get some continual fiscal stimulus, we think those are the types of names that are going to play catch-up. But if you're looking for that quick hit, I really continue, unfortunately, to believe we're going to continue to extend ourselves. So you're looking at the Zooms, the names like CrowdStrike. One stock that we picked up a few weeks ago is Restoration Hardware. I think that beta trade, because to Scott's point, there is some FOMO out there. That's where the money is going to continue to flow, at least for the next month or two.
Yeah, Scott, let's bring it back to you because a lot of investors look at companies that are missing on their earnings, for example, but still, buying in because they don't know what else to buy. And they'll say, at the end of the day, what am I going to do? Stick my money in the bank and get 1% or invest it in the market? Some would say that's how the Fed has engineered this whole thing.
If you're lucky, Jackie, I mean, these days the banks are down to like 0.001% in savings accounts. So if you find a bank with 1%, let me know. And to Rob's point, I like the call on JP Morgan. Citigroup's down there, too. I mean, those are stocks that have not totally rallied with, say, some of these big moves in the last few weeks. So that's an area to see. Then the fact that they may play catch-up in the next few weeks, but I'm not so sure they cut the mustard because while the federal government has backstopped a lot of these banks, the reality is if economic growth does not come back, if the yield curve does not steepen as I think a lot of investors expect it to, these banks are still going to have a tough spot with net interest margins. So I would still go, as I hate to say it, the FANGs here, the strong balance sheets companies, the companies that have a lot of revenue power, because that's where I believe as markets get chased here, where the umph is going to be. So in the NASDAQ, especially Amazon, Adobe, Microsoft, some of those names have been really strong for us, and we're going to keep holding them.
All right, I have about 20 seconds. Rob, I'm going to end with you, and I want to talk about some of the retail names. These guys have been hit hard. Neiman Marcus filing for bankruptcy. J.Crew. Does retail rebound for this if it takes longer than we thought?
You know, I think retail's in a lot of trouble. But I think, Jackie, when you look at those names that you're talking about, Macy's, for example, they really don't have a clear value proposition in the days of Amazon. So that's why something like a Restoration Hardware you're seeing doing well. Those are the names that are going to do well.
Yeah.
If it's something you can buy on Amazon, they're done.
Amazon is pretty remarkable in terms of what we've seen there in the face of this pandemic. Gentlemen, thank you so much, and thank you out there for watching.